something historic is happening in America, and most people have no idea. The US government is quietly becoming an investor in the stock market, not through pension funds or stimulus packages, but by actually taking ownership stakes in major corporations. Washington now owns roughly 10% of Intel, 15% of MP Materials, the country's only rare earth mining firm, 10% of Lithium Americas, and even holds what's called a golden share in US Steel, giving it veto power over corporate decisions. This is being called a national security strategy, but in reality, it marks a seismic shift in how capitalism itself operates in America. Because when the government starts owning parts of private corporations, it begins to pick winners and losers, reshaping the free market into something that looks a lot like China's economic model. So, how exactly is the US government buying into these companies, and with what money? In Intel's case, it came from the CHIPS and Science Act. Instead of just handing out grant money for new factories, Washington negotiated shares in return, a 9.9% ownership stake, with the right to buy more if Intel hits production and job targets. With MP Materials, the Department of Defense used convertible preferred shares and long-term contracts to secure 15% of the company and control over export rules. Lithium Americas got a $2.3 billion Department of Energy loan, but the deal included stock warrants that let the government buy up to 10% of the company if the lithium project succeeds. Even US Steel was required to give the White House a golden share after Japan's Nippon Steel tried to buy it, effectively granting veto power to Washington over future deals, foreign sales, and executive decisions. This means America is now using tools like loans, grants, and defense funding to quietly buy equity in critical industries, from microchips to minerals. This move mirrors what China's been doing for decades. Beijing owns or controls major stakes in key industries, semiconductors, steel, telecoms, energy, using them as leverage to shape policy and protect national security. For years, the US criticized that approach as unfair and manipulative. Washington warned that state capitalism distorts global markets, kills innovation, and props up inefficient companies. But now, the US is adopting its own version of that system, not through nationalization, but by embedding itself as a shareholder. The logic is simple. China controls nearly 90% of rare earths, 70% of lithium refining, and dominates solar panel production. America simply can't compete with a country that controls the full supply chain. So, the US is adapting, and quietly turning into a state-backed investor economy, the double-edged sword of state capitalism. On the surface, this looks smart, it's patriotic, it's about self-reliance, but there's a darker side. When the government becomes a shareholder, politics start guiding corporate strategy. Funding and approvals can depend on connections rather than innovation. This encourages rent-seeking, where companies chase subsidies instead of building better products. It's already happened in China, where politically connected firms thrive while independent innovators struggle. Over time, that slows growth and creativity. And if the US keeps going down this path, it could build an economy where political favor matters more than entrepreneurship, a subtle but dangerous drift from capitalism towards state control. So, why is America copying China now? Because the global economy is splitting in two. On one side, the Western system built around the US dollar. On the other, China's state-backed network built around the yuan. Both sides are racing to dominate the same resources: energy, microchips, minerals, and digital infrastructure. Whoever controls those, controls the future. China's grip on rare earths and green tech gives it enormous leverage. The US can't sanction or outtrade a country that owns the supply chain. So, Washington is responding by investing and owning the industries it deems vital for survival. This isn't about short-term profits, it's about strategic control, about building an American version of state capitalism. But here's the catch: the industries being brought back, semiconductors, AI and lithium, aren't job creators. They're automated, robotics-heavy, and require advanced degrees. So while politicians promise a manufacturing revival, the real result may be a more centralized, high-tech economy, run by machines, not people. For investors, though, this could reshape markets. When the government becomes a shareholder, its interests shift. It suddenly has a stake in keeping certain stocks stable, especially during election years. That could create artificial safety nets, or bubbles. The new winners won't necessarily be the most creative companies, but the most politically aligned ones, those in sync with Washington's strategic goals. This blending of politics and capitalism could define the next decade. The US is moving away from the idea of pure free markets towards something hybrid, a system where the state acts not just as a regulator, but as a partner investor. It's a radical shift that could either protect America's future or slowly erode the freedom that made it powerful in the first place. Because once politics and profit merge, once the line between Wall Street and Washington disappears, the question becomes, who's really running the economy? The markets or the government? So, what do you think? Is America simply defending its national interests, or is it quietly turning into what it once warned the world about? This story isn't just about money, it's about the future of capitalism itself. If you found this breakdown insightful, make sure to like the video, subscribe to Express EconGeoFinance Insights, and turn on notifications for more deep dives into the world of economics, geopolitics, and finance. Because the next big shift in power might not happen in Washington or Beijing. It might happen in the stock market itself.